Welcome to my channel. I'm Scott, and in this video I am going to walk you through the process of valuing Fortuna Silver Mines stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Fortuna Silver Mines is a mining company with mines in Peru, Mexico, Argentina, and Western Africa. The mine in Mexico is called the San José Silver Mine. That's in San José del Progreso, Oaxaca, Mexico. That mine produces gold in addition to silver. The mine in Peru is called the Caylloma Silver Mine in Arequipa, Peru, which also produces zinc and lead. The gold mine in Argentina is called the Lindero project in Salta, Argentina. This year, the company merged with Roxgold and acquired mining projects in the Western African countries of Burkina Faso and the Ivory Coast. Only the Yaramoko mine in Burkina Faso is in operations. The company is headquartered in Vancouver, British Columbia, Canada, and was founded in 2004. It trades on the New York Stock Exchange, TSX, Deutsche Borse, Mexican Bolsa, and London Stock Exchange. Let's get started with the model. This is a small cap company, 1.2 billion market cap. They're trading at $4 a share, and they have 291 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. So they had their first positive free cash flow in the trailing 12 months. It was negative before that. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that's positive every year. Revenue is a sales for the company, and that was pretty steady in 18, 19, and 20, but jumped a lot in the trailing 12 months, up to $500 million. This is the company's income statement. The top line is the revenue, the sales. Here's a breakdown of their 2020 revenue. So the mine in Peru generates silver and lead. That was $43 million. That's the only place they generate zinc. That was $24 million in revenue. The mine in Mexico generates the most revenue. It produces gold and silver concentrate. That had $188 million of its revenue. The mine in Mexico generated $20 million of sales from gold doré. Gold doré are bars composed of gold and silver. So depending on how much gold and silver are in those bars, that's how much money the company can generate. The more gold, the more money they can make. Here's a breakdown of 2019 and 2020. This is by mine, and they also show you how much metal they produced. So the reason their revenue went up from 2019 to 2020 was from Lindero. This is their project in Argentina. They sold about 9 million ounces of silver in 2019. That went down to 7 million. But they sold more gold ounces from 50,000 to 53,000. That's why their revenue went up. Gold is a lot more expensive than silver. The reason their revenue went up so much in the trailing 12 months when compared to 2020 is because they're producing so much more gold than before, mainly due to the Lindero project. In the first 9 months of 2020, they only produced 30,000 ounces of gold. In the first 9 months of 2021, that went up to 131,000 ounces. Their gold production went up 337%. Since gold is so expensive, almost $1,800 an ounce compared to $26 an ounce for silver, that's why their revenue went up so much. Below revenue is the cost of revenue. These are the expenses directly related to generating the revenue. Revenue minus cost of revenue gives you your gross profit. And that was the highest in the trailing 12 months at close to 200 million. Below that is their operating expenses, then their operating income, which more than doubled from 2020. Here's a breakdown of their 2019 and 2020 expenses. 35 million in G&A. These are operational expenses like payroll, rent, insurance, things like that. Exploration went down from 2.4 million to 1.2 million. 12 million from foreign exchange loss because they're converting money in different currencies. And then 4.4 million in other. It seems like they took on a lot of debt. They paid over 10 million of interest on their debt in the trailing 12 months, a lot higher than 2020. And the bottom line of the income statement is their net income, which is positive every year. This is their statement of cash flows. The top line is operating cash flow. That's how much cash the company generates from its operational business. So it's a good sign they generate positive operating cash flow each year, and it peaked in the trailing 12 months at 150 million. Then you have capital expenditures, which are investments in property, plant, and equipment. A mining company uses CapEx when they buy the rights to a mine. Also when they purchase equipment to extract the metal or to process the metal. And they spend a good amount of money each year in CapEx, $100 to $225 million a year. Operating cash flow minus CapEx gives you your free cash flow. And they do have negative free cash flow every year. It was positive in the trailing 12 months for the first time. In order to grow their business, they are adding equity and debt. They added 70 million of stock in 2020. When a company adds stock, it dilutes the current shareholders. They added 80 million of debt in 2019, 30 million in 2018. They added a similar amount of debt as they paid off in 2020. And they added 10 million of debt in the trailing 12 months. Here's a breakdown of their 2020 operating cash flows. And to calculate cash flow from operations, it starts with your net income that was 22 million. Then you have to add or subtract the non-cash items on the income statement. They had 45 million of depletion and depreciation. When they purchased the mineral rights to a mine, they put that onto their balance sheet. And the more metal they pull from that mine, the more it gets depleted. And they have to pass through a depletion expense onto the income statement to bring down the value of that asset on the balance sheet. When a company believes it removed all the metal from that mine, then that location is completely depleted, and the value of that asset will be zero on their balance sheet. On their income statement for 2020, it shows 37.4 million of income taxes. That's a non-cash item, so they add that back to the statement of cash flows. They didn't actually pay those taxes. Those are the taxes they calculated according to their accounting rules. They actually paid 28.2 million in taxes. A company has to pay the taxes the governmental authorities say they have to pay, not what their accounting rules say. If there's a difference, then they have to carry a deferred tax asset or deferred tax liability on their balance sheet. They pass through an expense of $12 million for stock-based compensation, and that $13 million foreign exchange loss, they have to add that back. That's a non-cash item. When a company purchases inventory, it's a cash negative. It brings down your cash flow. So even though they reported a $22 million profit, they actually generated $94 million of cash flow. This is their cash flow from investing section, and their CapEx will be the sum of these three items. They bought more mineral properties, they had expenses related to the Lindero project, and they also had capitalized interest on the Lindero project. It looks like they were advanced $15 million to be used at the Lindero project. They purchased $7 million of investments, so that's a cash outflow. They received $10.6 million from selling investments. It looks like they're owed $13 million from long-term receivables. So they had a cash outflow of $113 million from the investing section. This is their cash flow from financing section. And they received $65 million from a credit facility, and they paid down $55 million in that same facility. They generated $70 million from issuing stock and a couple other smaller items. So they received $69 million of cash from the financing activities. This is the equity section on their balance sheet. They raised $1.1 billion from selling their business, and they profited $251 million from running their business. So their equity is about $1.4 billion. Let's look at the capital structure. They have $1.4 billion of equity, $200 million of debt. They're 86% equity, 14% debt. Their net debt is $83 million. And I gave them the middle whack on Finbox, 8.3%, and that's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's $1 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $900 million. We divide that by 291 million shares. And we get a calculated stock price of $3. They're trading at $4, so they're trading at a 31% premium. It's a sell according to the model. The average analyst projects their revenue to increase 4.1%. To calculate their future revenue, I increased it 4.1%. And it's hard to calculate their future free cash flows because they just started generating positive free cash flow. The average company converts 10% of their revenue to free cash flow. So that's what I did for 2023 and 24. I multiplied their revenue by 10%, and I multiplied it by 5% in 21 and 22. Because it seems like they're still growing and they won't hit max efficiency until 2023. Simply Wall Street is really high. They're at $36 a share. They're saying it's extremely undervalued, this stock. 4 analysts priced this stock. The average price target was $5.38. This is where the stock has been trading the last 5 years. So you could see it was close to $7 a few years back. Then it dropped really low. It looks like below $2. And then it came up to $10. Now it's come way back down. This bottom chart is the price of silver for the last 5 years, so it doesn't look that much different, especially for the first 4.5 years. But there's a reason Fortuna went down so much the past few months, and silver hasn't retracted nearly as much. We'll talk about that in a little bit. On November 11th, the stock peaked at 550. On the 12th, it dropped way down to 4.25. Look at all this selling activity. And then it kept dropping more and more and more. It's come up a little since the bottom on 11.15, but not too much. In 4 days, the stock dropped about 50%. They had a permit for 12 years to work on their mine in Mexico, and that permit expired in October. They filed for a 10-year extension, but they haven't received approval. That's a big reason the stock has dropped. It looks like they may not receive approval, and that could really affect this company's cash flows. Governments and communities do not really like mining companies. They're really bad for the environment. They do add jobs, but there's many instances of people getting injured or dying on the work site. They have a beta of 1.15, so the stock pretty much moves with the market. It's down 43% in the past 52 weeks, while the S&P is up 29%. The 52-week low was $374, the high was $10. And the stock is trading below its 50-day and 200-day moving average. There's been 10 million shares traded each day on average the past 10 days. Of the 291 million shares outstanding, 289 million are on float, 33% held by institutions, and 3.5% of the shares are shorted. Each year they're adding employees, which is a good sign. They're up to 1,200 workers. If you put $10,000 into this company 10 years ago, you would have been down a ton. But just a few months ago, you would have been up. But recently the stock has regressed a lot, and your $10,000 would be only worth $6,000 today. That's a 40% loss. At the end of 2020 and in January of 2021, there was some selling activity. But as the stock price has come down, a lot of insiders seem to be buying the stock. Van Eck is the biggest shareholder at 11%, then Murray Asset Global, Ruffer, Condire, and Euro Pacific. Let's look at their financial ratios. They have a pretty good PE at 19, which is better than the market median average. Price to sales is also pretty good at 2.3. Price to book is 0.9, so their ratios are looking a lot better since their stock price has come down so much, because the numerator in all these ratios is their market cap, or stock price. So the value of their balance sheet is higher than their market cap. The company is worth more in bankruptcy than active. If it went bankrupt today and sold all the assets, paid off all their liabilities, it would be able to give each shareholder $4.67. Even though each share is trading at $4.02. Their ROIC is a bit low at 6.2%. They can easily cover their interest payments 14 times. Their ROE is 4.5%. Their current ratio is 1.0. Their quick ratio is 0.7. They have $136 million of cash on their balance sheet, $68 million of receivables, and $71 million of inventory. The company seems to have just enough capital to get by. They generated $12 million of free cash flow in the trailing 12 months, and they have negative $11 million of working capital. Working capital is current assets minus current liabilities. The best way to look at ratios to compare them to companies in the same industry. The only other company I did in the silver industry was First Majestic. And Fortuna has much better price multiples. First Majestic has a good current ratio. Fortuna is 1.0. Both have low ROEs. Fortuna is a little better. Fortuna is better in debt, and they're about 1/3 of the size of Majestic. And First Majestic just started paying a dividend. It's really small though. So to summarize, I have them trading at a 31% premium. But as you know, a lot is dependent on the price of silver and also on the price of gold. They do pull some gold. So if those commodities go up a lot in price, so will their stock price. The twist is if they get approval to continue mining in Mexico. If they don't, that could really affect this company because that's a big revenue generator for them. That's something to keep an eye out for. I ranked their free cash flows 5 out of 10, their revenue 6 out of 10, and their ratio 7 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.